Fed used just 130 words this week to say one thing out loud. Do not count on a rate cut to bail anyone out. Most people heard the silence. The number that actually matters quietly moved the other way. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. This is your weekend update for the week of June 19th, 2026. The markets are closed today for the Juneteenth holiday, so the figures I'm sharing are as of yesterday's close. The new Fed in fewer words. This week brought the first Fed meeting led by the new Fed chair. The Fed held its key rate steady at 3.5 to 3.75%. What stood out was not the decision, it was the style. The official statement ran only 130 words. There was no forward guidance and no promise about what comes next. The one thing the Fed did commit to was getting inflation back to 2%. Here's the part the market noticed. 9 of the 18 members on the committee penciled in a possible rate hike later this year. That is what people call a hawkish hold. Steady today, but leaning toward higher, not lower. So what does this mean for your clients? It means the wait and pray plan is getting risky. Short-term rates took the hit on the news, but longer-term debt, the kind that drives mortgage rates, held up well and recovered most of its losses. Oil, gas, and inflation. There was good news on the inflation front too. A Middle East deal was signed this week, and that helped ease pressure on oil. Oil is now trading around $75 a barrel. Gas has dropped below $4 a gallon, with room to fall further. Lower energy costs are one of the cleanest ways to cool inflation, and that helps the case for steady to lower rates ahead. Where rates stand, the 10-year Treasury closed at 4.46%, down slightly from 4.48% a week ago. Quiet, but in the right direction. As long as oil stays in the 70s, bonds have support. The reasonable expectation from here is for the 10-year to trade in a narrow band between 4.4 and 4.6%, and more broadly between 4.2 and 4.8%. The bigger surprise, if it comes, may be a move toward the lower end. Now to this week's mortgage rates. The 30-year conventional, 6.58%. The 30-year jumbo is 6.81%. The 30-year FHA is 6.15%, and the 30-year VA is 6.17%. These are national averages from Mortgage News Daily, not an offer to lend. Housing, 2 stories at once. Housing is telling 2 stories right now. Pending home sales rose 3.8% in May and were up 4.8% from a year ago. That's the 4th monthly gain in a row, and every region improved. But buyers are still showing up. At the same time, builders are cautious. Builder confidence stayed low for the 14th straight month, and new construction slowed. Fewer new homes plus steady demand keeps inventory tight, and tight supply keeps home prices firm. For your clients, that is the real headline. Waiting for prices to fall may be longer bet than they think. This is exactly why strategy beats rate, always. We have 2 pieces worth your time on the dashboard this week. The first is a $400 a month with no plan is $48,000 gone in 10 years. Do the math. The second is the Fed just killed your rate cut plan. Here's the math on waiting versus acting. Both speak directly to waiting versus act question your clients are asking right now. You'll find these along with several other tools on the right side of the dashboard or below the video, depending on your device you are using. For the client whose tax returns do not tell the whole story, here's something for your self-employed and business owner clients. For many of them, a tax return does not show the full picture of what they can truly afford and repay. We have a selection of loan programs built for exactly that situation. The first one to know about is the bank statement loan, which lets qualified borrowers use their bank statements, not their tax returns, to show income. You can learn more at rsrlinks.com/bank statement. That's rsrlinks.com/bank statement. That link is also available on the right side of your dashboard or below the video, depending on your device. KeySteps is a free platform offering credit monitoring, identity theft protection, and household budgeting tools all in one place. Visit rsrlinks.com/keysteps to share it with a client. Next week is a bigger one for data. Wednesday brings no new home sales. Then Thursday is the day to watch with the final read on first quarter GDP and the May reading on PCE inflation, which is the Fed's preferred inflation gauge. After this week's hawkish hold on that inflation number will matter. That's your weekend update. We'll appreciate you listening, and we will be speaking to you again next week.